Dear Forex traders, trust you guys benefit from our weekly Forex market analysis and Forex trading strategy. So guys, welcome to the Millionaire Logistics YouTube channel, and in this particular content we shall be sharing with you our Forex trading strategy and education on the pound USD. So guys, don't forget guys to subscribe to the channel, and don't forget to leave your comments on how you took this trade. Okay, so guys, welcome back to the channel guys. So on this particular content, like I earlier said, we will be sharing with you how we analyzed and made profit from the pound USD trade and analysis, which was shared on the 6th of August. So guys, remember on the 6th of August guys, after the release of the NFP on the 5th, we shared with you our sentimental bias and direction on the pound USD analysis. Okay, so this particular content guys, we shall be looking at the Forex trading strategy employed for that particular analysis and how the market performed right in real time. Okay, so remember guys, at this point this was what we shared, this was the highlight that we shared guys, and if you're considering or you have doubt guys, you can check on the analysis right by clicking the link above. Okay, so from the daily time frame guys, we at this point here, this was on the 1st, right, and the NFP was released on this day, the 5th of August. Okay, now this was on a Friday, and guys, on this Saturday, the weekend guys, we shared the analysis. All right, and if you look right here, this was the extract of the analysis that we're expecting an up move, the price to actually move to the upside into this zone, and then we'll see we'll see an opportunity here to go short, then we'll go short here, which we saw this rejection. So guys, quickly just want to share with you how it went. Okay, now remember guys that we kept the Fibonacci tool at that point. This was what we did, right? Seeing this rejection and seeing these massive candles right here, seeing right here that there was a kind of doji here, and the price, there was an impulsive move to this upside guys. Remember that we had already established that pound USD was in fact in a downtrend first of all. Okay, pound USD was in a downtrend, and then before we saw this move here, like a railing wave candlestick pattern, and we saw a drop in the price. And when the price dropped, what happened? This was an impulsive move to the upside, and we saw a drop, right, that broke this structure right here, this impulsive candle, right? And you can see that this price was in fact supposed to perhaps react from this point to this point, which we saw here, but the price failed to make a higher high from this candle, right? The price failed to go higher, and we had already established that we had this supply zone right here. Why did we have a supply zone? Okay, now this particular candle that we see here, we can see this body, this particular rejection candle, that the price resisted here for a long time before price actually fell rapidly. On the daily time frame, you can see a red candle, and what, a kind of indecision candle, but then there was an impulsive move to the downside. So there was this kind of move right here, this supply zone, because of this impulsive move that caused a price decline to this level. Okay, and the zone was actually established here, right? So let me not go detail further on how this zone was kind of established. However guys, if we use our Fibonacci tool, right, seeing this structure here that will highlight why, we can see that from here this was another price decline, massive price decline to the downside, and then we saw a corrective move to the upside, right, and then the decline continued right here. So this right here, this price right here, is what we see as well a lower high, because the price obviously is in a downtrend, right? So we established there that this is a lower high, and we see price actually break the structure, coming here to form what, a lower low. Okay, so from this point right here to this point is a high swing, right, a price swing. Okay, so when we move our Fibonacci level, our Fibonacci tool, right, from swing to swing, as we see here, what we would establish around here, where this price is actually the 79.0 fib level price. Okay, and what we noticed was that price in fact came to that level and then reacted to the downside, and then when we matched it up with the fundamentals, at that particular time. We then saw some fundamental reasons that okay, that this level could actually be a significant level in the market, right? And we just expected that okay, if the price makes a move to the upside, we would actually be going short. So now we have two solid buyers. Structure wise, you can see how the market performed, and then the fundamental standpoint. All right, now let me take the fib level off. Okay, so went for that to bring down to the 4-hour chart, and what we saw here was almost the same thing. Okay, that this price right here where we saw this level, you can see some kind of price clusters down here, price consolidations and all that, and then price made this very much move to the downside. And we analyzed that okay, that if the market goes up back into this zone, we would actually take a move short. All right, and this was what we saw, a massive push to the upside, right back into this zone, the major swing zone, and then the price came to the downside. All right, now let's go down. Our first strategy definitely is just the market structure and using the Fibonacci tool as confirmation. So looking at this price, guys, what you'll notice is very simple. You can see price actually making higher highs and higher lows to this point, and as price actually came down here and made this very impulsive move to the upside, the price failed to make a higher high. Now if we look back here, we can see other minor swings in the market, like this is actually a swing, this is a swing, but then price broke and price came into this swing, right? Expectingly, we would expect that price will not break this level, because this right here is a swing. Okay, this right here is a swing that consolidates and confirms with what? This resistance level right here. You can see resistance level, see price stalling at this point before it broke to this upside, right? The price broke to this upside, right? And actually reacted. But at this point, you can see price actually breaking this swing here, breaking this level, being this candle breaking and closing below. All right, so what we can see by this kind of formation right here is the price actually breaking significant support levels. All right, and it confirms here with the fundamental analysis too as well that we're expecting a bearish pound to USD, right? We're expecting a bearish pound USD. Okay, so the price got into this level and since then has been coming to the downside. All right, now my favorite time frame for day trading, guys, will come to the 15 minutes. All right, now the 15 minutes, guys, is very small here, but still on this level, this is the origin of the price. Let me use this tool to actually keep this here. All right, the origin of the price, which if we look at it, we will see that this is just one day, the period separators here that are showing all the daily time frames and all. And if we match this by the time of the day, you will see some reasons to actually go short. Okay, now I wouldn't really be going into trade sections, guys, in this particular content. However, guys, just notice that we're expecting another tool, right? An equipment, so we can be sharing with you our automated trading system, our EA, that we developed, guys, for everyone to benefit from. Okay, so we're sharing with you how it works and how we confirm the trade sessions and the Fibonacci tool with the supply and demand zones. Okay, so everyone can actually benefit from it. But looking at this chart here, looking at this chart, now we know that okay, because we've seen that price has broken structures on the lower, on the higher time frame. Okay, so we're kind of looking for bearish potentials in the market. So what one can do here is to see a trend like this, and you can actually plot, use your Fibonacci to strike from where the high of the day, the highest of the day, and the lowest of that day. Okay, from structure to structure. And if we actually do this, we'll find some reasons or some entry reasons to play. Like, see this now for this day, you can see how it works here. This is another significant level when the market opened, right? Around here, this is the Asian session, and then this is where this is still the Asian session, and the London session, which is around here, we found that this price structure could not be broken, right? What did we notice? We see that from this point to this point, the price failed to break below here in the London section, right? The London section till up to when what the New York section, which is here, and we see price trading below at that 38.0 Fibonacci level, just around here. Okay, that this structure has not been broken and the price is also at a significant level. This could actually mean an entry for us. Say you're looking at the trading on a scalping perspective or an intraday perspective for day traders and all. So this is actually an entry down here to the 0.27 level, and just see how the price is still placed, how it went on another day just around that same time within the London session and where the New York session, just close to it. You can see how price tapped into that level and hugely rejected the level. Now after this kind of move, guys, this kind of institutional move to the downside, one can definitely expect that, hey, that there will be a refill. Now we've shared this in a previous forex trading strategy, in one of them, where when you see a rally like this, it causes price gaps, and you should expect, in the majority of the times, guys, the price actually refills to a particular level. So if we actually want to draw the tool, the Fibonacci tool, you find some kind of confluence around here or the next day, and what we see here is just the same thing: price gap here, filled up to a particular level. So most times for day trading, when I see this type of price patterns within a certain time, like if we actually tool them up now, you could see that they match with certain times. Now this is 14, that's this is 12, like this is 12, guys. I've shared with you guys how the time works in an analysis, though I think analysis or forex trading strategy, how the time works. Now there's 14 on the chart, 14:00 on the chart is actually 2 p.m. on the chart, but in real time is 12 p.m. okay, because the chart time is kind of 2 hours ahead of my own real time from Nigeria. Right now, just around here you find the 15:00, which is the beginning of the New York trading session, and I see this before, so I will be looking at, let me say I see price consolidations within this time. I would actually be taking some little profit from the price refill, just a short movement of price refill to this point, right? So let me add a Fibonacci tool to just show you exactly what I mean. So this is the highest where you see that move. Let me remove, I'll just remove the Fibonacci tool here so we can just track how those prices work. Now remember, they are kind of highest one. This is the kind of move we're talking about, okay? Now from the beginning right here to where? Here. Because we're looking at, this is the time before the New York session, which is by 1 p.m. that we should be looking at the price, okay? Now what we see here is price rejection, right? You can see this price rejection around here. You can see a minor structure formed. How is it a minor structure, guys? I'll tell you how. This is one candle and this one is below and this is above it, right, forming a structure. So I could actually risk entering a trade somewhere around here, right, with a short-term take profit at the 38 level, and if price breaks the 50 level, and you see how the price reacts for within that same day after this price decline, huge price decline, creating a gap in the market. Okay, now let's see the next one we have here. The next one we have here is just this. Okay, so if we do the same thing, we draw a fib level from that decline to the end, and then check if it correlates with the time of the day to see, just for some short moves. All right, now this is in between. This price, actually we've shared this analysis before though, but this drop happened within the New York session. Okay, this was where the rally within the New York session, this was on a Friday, the NFP day, right? And what we see that after this massive rally within that time frame, right, within that time frame, just after during the New York session, guys, we saw this same thing, price trying to refill some positions to the downside. Okay, so it's an area of interest, kind of consolidation that we should look for to confirm in the market. And then whoa, the price came back into that zone we're expecting, right? And you can see the structure here. First, we can see this level. So for the Wyckoff pattern, this could actually mean what we all know as what the bias climax, alright? Bias climax. And then after this bias climax, you can see this particular upthrust kind of move that breaks above the bias climax, and then what we see is the break of this structure, okay, which we can say as the change of character, right? And then price goes back into that zone, but this time this second move, guys, isn't as high as this, right? And then from this point, actually I can decide to risk from as price actually hits this level just within here, right? And again, what we see again is just another thing. Price, this gap, this huge, very impulsive rally, right, to the upside that somehow one will expect it to be filled, okay? So let's see how it works from the downside to where? The upside. Right, within the time of the day. I think it's not that quaint. It's not hitting there, but let's see how it works, guys, okay? So from this price here, expecting a decline within a time of the day. This was kind of late. It's kind of late, but within that time frame, you can see price coming to fill that gap at least 38 and 50 for some short term profit, and just around here after that impulsive rally, okay? But from where our analysis coincides, we started seeing market breaking structure to the downside, and the price actually moving to the downside, right? And from there we can start looking for sell opportunities too, because we're actually trading in line with what the market structure won, and we also trade in line with the fundamental analysis, right? And we expect for that for the pound USD to continue to fall, right? The pound USD to continue to fall to at least break this structure and continue the trend lower. This is the daily time frame, guys. We expect pound USD, like in the analysis, to break the structure, right, and continue lower. So guys, with that, guys, we've actually shared with you just a schematics of how a pound USD trade analysis worked out. However, guys, in the consequent week, we only got some short sell opportunities for the odd USD and the odd card, which we shared. The conditions for buy didn't really work out, right? So if some of you may have traded that, must have perhaps made some little losses. Sorry, we apologize for that, but that's the market, okay?